where the news comes first.
Well, the stock market finished its worst day since the depths of the Great Recession in early 2009.
Yeah, the Dow plummeted more than 500 points. The Nasdaq dropped 136, and the S&P fell 60.
What a bad day. And so what does all this mean for investors and, of course, your family?
Well, to add a little perspective, we welcome UCCS economics professor Fred Crowley. Fred, thanks so much for joining us. We always enjoy your insight because you know so much about this. You can help explain it to everybody.
Exactly.
I'll try.
So the biggest question is, what is causing this slide today in particular?
I think it's a culmination of several things, but ultimately, in the investment world is a little bit worried about what happens when the government stops spending money. That's an important component of GDP. So they're worrying that maybe it's going to be a recession.
And so for families at home, I mean, the question we're getting in, people are emailing a lot. So what does this mean for me? What's this mean for the average person?
Well, for the average person, what it really means is several factors. If the government stops spending, there are some discretionary funds which will have to be cut. Grants, student loans. In El Paso County, they spend about $185 million a year in student loans. Mortgages financing. These are things that are going to be on the table for cutting or reduction.
So it's going to have a trickle-down effect. It's going to essentially hit everybody.
Right, and if these things happen, there's multipliers because I can't buy my house. Maybe someone doesn't get the job building the house.
Yeah.
So there are consequences to everyone in the community, nationwide too, of course.
Well, and we remember back in 2008 when that first dip happened. Are we looking at a double dip here? Do people need to be concerned, and how should they begin saving and preparing for the future?
Well, obviously, yes, but really time to have saved was before we got into a further headache, and that's been difficult. The unemployment rate's locally about 9.5%. Nationally, it's 9.2%, and that number is going to be new number coming out tomorrow.
Yeah.
So we'll have to wait and see what happens with that. But yes, watch your budget, spend carefully, and maybe you can weather this mess. But more than likely, the unemployment rates are going to go up a little bit before they come down.
Not good news there.
Thanks so much, Fred.
Thank you.